Hello, I'm Ross Bird, Equity Strategist for Aegis Equities Research. With me I have Peter Ray, Stock Picker for the Aegis Alpha Power Portfolio. Peter, in the context of the economic outlook I've just outlined, how have you selected your stocks for the Alpha Powers portfolio and the makeup of that stock in these current difficult market conditions? I noticed recently you've included BHP and Worley Parsons in the portfolio. Stocks that are not typically high yielding stocks. So it's interesting your thoughts as to the inclusion of those stocks.
Yes, that's right, Ross. I've recently added BHP and Worley to perhaps add a bit of diversification to the portfolio. As you've been talking about, this is one of our preferred sectors, the resources sector. BHP, of course, is Australia's largest diversified miner and has been performing very well on the back of strong demand for our commodities from the Asian region, China and India. We've recently seen Rio Tinto settle on an 85% plus price increase for its iron ore, and we expect BHP to probably announce something similar very shortly. So the earnings outlook for these companies is very strong. So stocks like that provide some offset perhaps to some of the weaker areas in the economy, and I think provide some balance in the portfolio. Sure, their yields are low, but with earnings rising, we'd expect the dividends coming from those companies to increase, so that over time the yields will rise. And BHP offers a fully franked dividend as well, so that the grossed up yield is reasonable. Worley Parsons, Worley provides services, engineering and specialist professional type services to the energy industry, particularly the oil and gas sector. So we expect the energy sector and oil and gas in particular to be a strong performer over the short to medium term and perhaps into the longer term, as the demand for energy continues to rise out of Asia. We see plenty of work for the likes of Worley Parsons. So we're expecting earnings to grow quite strongly for this company too, and that accordingly dividends will grow. And again, it adds some further diversification to the portfolio.
How does Orica add some benefits to the overall portfolio makeup?
Well, Ross, Orica also has exposure to the mining industry. Its mining services arm provides explosives and other services to the mining industry. So it again is exposed to an industry that we expect to generate good growth over the short to medium term. So it also is part of this approach to adding some diversification and balance to the portfolio. Its yield is not bad, it's a little bit higher than for BHP, so it's also giving some yield to the portfolio.
Let's talk about Telstra. Telstra is sort of company that's been a little bit out of favour in past times, but I see it's included in the portfolio now. What's the benefits of holding Telstra in the portfolio?
Yes, look, Ross, Telstra has been an underperformer in the past, and its share price has still been a little bit volatile in recent times, but we think the underlying business of the company has improved. The new management that came in with Sol Trujillo a few years ago has put a transformation program in place, and we think that the benefits of that will be gradually realised over the next few years. With the first half 08 result that Telstra released back in February, there was already some signs starting to emerge that the company was benefiting from its transformation program. It reported good earnings growth, it upgraded its guidance, so we think that the underlying business is doing quite well. Some of Telstra's competitors are suffering at the moment, so Telstra has been benefiting from the plight of some of its competitors. So we think the outlook is relatively good for the company over the next few years. It's also a good defensive stock in the current environment. It provides some defensiveness to the portfolio. So relatively comfortable with the outlook for that stock at this point.